been a big 24 hours for the markets. We've seen the latest CPI, the interest rate announcements, and in the next 24 hours, the PPI announcements. So what's happened to Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. We've got a massive video to get through today with a huge update. Make sure you smash the like button. You've joined me, Jason Pizzino, on your home of macro cycle analysis, covering Bitcoin, cryptos, the stock markets, and of course, the real estate cycle, where we see the massive everything bubble continue to play out time and time again. More on that in today's video, but I do have a massive announcement for you guys with a new traders group. Now, I'll get into that a little bit later on in the video, but of course, if you haven't subscribed, do that as well. Shills are out of the way. Let's have a look at the data that has come through, which is the most important piece of information until the next meeting. Core CPI, 0.2. The forecast was 0.3. CPI, month over month, slightly down. CPI, year over year, slightly down. So this is all good news. Federal funds rate remains at 5.5%, and it doesn't look like the Fed wants to cut rates anytime soon. And soon is up to your preference. To me, soon is with over the course of 2024. And yes, there is a hint here of a potential cut in 2024. However, as I've been pointing out here on the channel for several months now, you can see that's January, and we were talking about this in late 23. Doesn't look like the market gets it right all too often. We think there's still going to be more and more pauses along the way. And even if there were cuts, well, it doesn't necessarily mean it's going to affect the economy too much. This is from Jerome Powell's mouth on Wednesday. A single quarter percentage point rate cut by itself wouldn't have a big impact on the US economy, with the path of policy being the more important focus. So if you saw a 25 basis point cut and then it rise again, it's probably more or less the same thing. So what people are waiting for are multiple cuts, or at least that's the way I'm seeing it with the economy, and it doesn't seem like that's happening. So if that doesn't happen, then I think they're going to have to get more used to rates at this level or maybe higher over the coming 6 to 12, maybe even 18 months, because of how much the markets have continued to pump in the face of interest rates remaining at 5.5%. The market got it so ridiculously wrong over the last 6 months, and the market and the prices of the indices have continued up. Stocks, the majors, the strong ones, have continued up. And of course, well, we know the history of Bitcoin over the last 18 months, going from 15K to 74K, now still sitting around 67. So that's the update for the interest rates. Nothing has really changed. Until next time, we'll continue to see what happens and whether it affects the market. But overall, I think the market's really coming to grips with these higher interest rates, because you're seeing it in the stock market. Those prices continue higher. So even though the masses want cuts, it doesn't seem like it's going to happen based on prices continuing higher. Call it inflation, call it money printing, call it an everything bubble, call it whatever you want. The prices are going up, and unless you hold assets, it's going to be harder to buy those later on. And once that catches up, that's where you get that big winner's curse phase, as we talked about in the last few videos, where you continue to see this market push up in the face of any sort of flash dumps or bad news, as I've also got here as well. As for the real estate prices, they have also continued higher. The US was up $2 trillion in 2023. It's up, sitting roughly around $47 trillion for their real estate values. Now, I think that's undervalued here, because Australia is somewhere around $10.7 trillion. And I would expect the US to be more than 4.5, 5 times the value of Australia's real estate, with our population being under 30 million and the US being over 300 million. So the numbers, either way, they're extreme and they're hitting new fresh highs. That's all part of this bubble that we've been talking about here on the channel, going into the winner's curse phase, where we are in the winner's curse phase, where you continue to see these prices go higher and higher in the face of seemingly bad news. And the bad news just keeps getting brushed off and brushed off. This was bad news 9 days ago. It was literally headline news. 63 US banks on the brink of collapse with $500 billion, call it $500 billion. And to me, at least from my experience, this is what you see as a raging bull market and an everything bubble, where you've got bad news like this and it doesn't do anything to the price of the index and that continues to new all-time high prices, well, there's only one way, I think, to look at it for now, is that you're in a massive bull market. Bad news is not affecting the market. In terms of the data, you can clearly see it's not affecting the market, as we've seen 322 days since a negative 2% down day on the market. So this is one of the largest ones in the last 10 years. Well, second largest, as you can see here on the chart. Essentially, the market has been going up and there's been less than a 2% move to the downside in any one single day. Eventually, something will break. Eventually, you'll see a move to the downside. But as you can see over the last several years, even when that does happen, the market has continued up because of the stage of the cycle we're in. And in terms of real estate, that continues higher. Why does this keep on happening? Well, the real estate market hasn't broken yet. And I think there's still a little more time based on the data that we are seeing. Unless the real estate market breaks down, the rest of the economy, the rest of the stock markets, the jobs and everything like that are going to continue higher. That's what has happened over the last 200 plus years. And I don't see it changing anytime soon, no matter what differences are coming out this time. Is this time different? In certain aspects, yes. But in the underlying understanding of the economy and the cycle, real estate prices have not broken down. There's nothing that has fundamentally shifted yet. There will come a time where that happens and the winner's curse phase is over and we turn and drop, but it's probably best to continue to ride that bull to the upside as you continue to see the numbers push higher. And higher they have gone on the S&P 500 and the Nasdaq today, a new all-time high daily close. You're probably getting sick of me saying this, but that's what happens in these bubbles. New prices here, new fresh highs and higher closes. And then the after hours has opened at 5,500 points on the futures market here. The Nasdaq, same sort of deal, new all-time high price, new all-time high daily closing price, and then the after hours market, which is this little dot here at the top here at 19,860. So getting very close to the 20,000 target. It looks like it's busting through these prices at the moment. However, I am cautious to wait for the actual session to open because maybe you get a little bit of an open here and then a close there. That would be your big reversal bar. It's been a rough sort of trading range as I've been looking at. Now, this has been a pretty big move to the upside, so I want to see how that plays out in the session in the next 24 hours, so when the market opens again. Now, this market's been obviously driven by this Apple AI hype, new all-time high price. Now we can move this to the next bar, new high volume, extreme volume there actually, some of the highest it's seen in its recent history. As for the daily, you've got a slight close under the 50% level, but again, that's very, very short term. It seems like the market is signaling it wants to go higher over the long term, even if you do get some sort of correction. I wouldn't be in the camp that is trying to look for shorts all the way up. Otherwise, it could fall in the camp of the Nvidia short players who continue to try and short Nvidia on the way up, trying to short Facebook on the way up again out of that pretty low price there. It was under $100 over a year ago, and these markets continue higher. And of course, Amazon getting closer to highs again. So that's another new all-time high price in the stock markets, which is no wonder why you're seeing a lot of these, the indices, S&P and the Nasdaq hitting new fresh highs. So let's take a look at cryptocurrencies. The fear and greed index still in greed at 70. Not much has changed here over the past few months. Going back over the course of a year, still sitting relatively high there on the fear and greed index. As for Bitcoin, last night after the news, you saw a pump up and now a correction on Bitcoin. And if you weren't trading it on the hourly chart, then none of this really matters. You had to move up, got all the excitement, you got to push back down, got all the fear back into it. And overall, unless we're going to see closes back above the tops now, so you can see there's a bit of pressure coming in there at about $70,000. I wouldn't be getting too excited for any moves past the current tops there at 72. So you've got the resistance there at 70. That would be the first case to close above to then test 72 again. And so far, the market, or Bitcoin, has been failing at 72K for the last few months. So at the moment, still above the 65, still below the 72. Trading range continues now, which it has been for about 3 weeks. So not much to do here with Bitcoin, which is probably why, if this thing isn't cooked, why you're still seeing the greed remain in the 70s or could potentially drop into the 60s. But the main deal here is price has remained in a trading range, and we're not seeing too many differences here. What we are seeing a few differences is the total cryptocurrency market cap. Now, I've got a lot of cryptos to get into with you in just a moment, but I do want to make a huge announcement to our Ultimate Traders Accelerator, which has now just been soft released to our members. This will become public soon, but if you do want to learn more about that or know when it becomes live, subscribe to the free email report. Link is in the top of the video description right here, and you'll get the free email report. You'll get notifications of when you're able to access the UTA. And we've also got an end of financial year sale on TIA Premium for everyone. Probably the Aussies are going to make the most of it. Tax time's coming up. You could potentially get some tax refunds on any sort of education that you do, but of course you're going to need to check with your accountants. But if you want notifications on any of those things, this is the best place to get notified. tiacrypto.com/subscribe, and you'll also get that free email report. Quick shout out to our traders over the last 24 hours since I showed you this yesterday, getting some nice gains here on their trades. So well done to you guys, killing the game over there. All right, let's have a look at altcoins now. TIA Crypto total market cap still putting in higher lows for the time being. You've got your April low here and also the January low. So I've been referencing the April low quite a lot because several of the altcoins have been holding above that particular low. And for me, that is the first level of support that you want to see this market hold. The level below that is around the January low. And I say the dates so that you can reference this for your individual altcoins. Of course, there's now hundreds of thousands of them. And that level is going to be the key significant level. If you start to see these markets drop back underneath these zones, that would mean we go back into some sort of reaccumulation range, and it's just going to take a lot longer for the market to pick up steam again. So it's not like it's the end of the world, but it's not what I would want to see as an analyst if we're going to see an altcoin season later this year. I think a drop back under 300 billion for the total market cap, excluding stable coins, would likely mean far more time until we saw an alt season. So this is the total cryptocurrency market cap, excluding stable coins, as I said, and of course, Bitcoin and ETH. Now I'm going to turn this one off. So we hide this and bring out the total cryptocurrency market cap. This one includes the stable coins. I'm just going to throw up the lines here. And that is our level there for the market, including the stablecoin. So roughly around 500 billion is the first level, 550 billion. And then the level below that is this low at 440 to that previous top there around 400. So if you're following either chart, they are the levels that I'll be marking up to understand that timing of that next alt season. Then it puts the alt season in doubt, but it could happen, just going to take a lot longer. With that in mind, let's look at some of these strong altcoins and recap those. We've got Render at the moment. So this is on a weekly chart. This is the April low reference, the 50% reference, and then the area that I wouldn't want to see these cryptos get under. So kind of like an invalidation level. I put invalidation levels on all of my charts so that I can get a view quickly of whether the coin's remaining strong or if is it slipping into a weak stage. Now, for some, it came up in the comments yesterday and I think a couple of days ago on the videos when it came to altcoins, is that some people would prefer to pick up falling knives. If you do want to pick up falling knives, then you must have a stop or an invalidation level in case that knife keeps falling. There's only so many times you want to get cut before you get out, right? Now, if you want to do what I like to do with some of my trades is get on board with a moving train. That one there means you're going to miss out on the lows, but typically the people who are buying the lows, the dips, have an average price somewhere around where that market confirms the trade is back on with the trend, and probably even higher than that because they've been trying to buy a hell of a lot of dips on the way down, and then their average price is well and truly high because they have a lot of money to begin and then they have a lot less money to put in at the bottoms. So it comes down to the individual trader. I hope that makes sense. That is how you're going to win at this game. It's not just about trade signals. Trade signals, if you don't know how to use them, then what's the point? It's like driving. If you know the rules to it, but you don't know how to drive, then you're going to get screwed either way because you still don't know how to put the accelerator on, how to put the brake on. It's all in theory. Here's a signal. Go and take the car out and drive. But you're probably going to have an accident. And that's what happens to the majority of people. They have no idea about invalidation levels and essentially risk management. Anyway, enough of my little rants there. Stay on the right side of the market. It's probably the easiest way because at least you get on board with the trend and the Gann swing indicator. One of the easiest ways to identify the trend and have significant areas of support and resistance, entries and exits pre-programmed for you here. So render still looking like it's on the stronger side, although you can see lower prices. You want to have some sort of invalidation level. I said that enough times. Injective is looking interesting. This was one that I had talked about being cautious of because of a similar pattern to Link in the previous cycle. These are the FOMO bars here. I say FOMO bar because when you look at it on the monthly, that's a big bar there. And over the last 4 months, it has reset that FOMO bar. Does that mean we shoot up to higher prices? Who the hell knows? Like, I don't know what happens on the black side of the chart or the right side. No one does. But if we can sway the probabilities in our side and try to read the market to give us an idea of what might happen next, well, then hopefully we're going to do better than most. And what I'm looking at here is this potential reset. And if you're wanting to play the confirmation, I would look for something above the 50% level here. It's on the injective BTC chart. And the invalidation is, of course, underneath these lows. The market has already dumped 70% against its Bitcoin value, so it wouldn't be a bad area to see some low form. Last time did about 88%. So there's your confirmation. There's the invalidation. Could this be the reset that it's needing to get going again? I'm continuing to watch this one closely. Link was the one I was referring to here. See the big pump, the reset, and it was not able to get going again. It failed and then fizzled out for the following 3 years there. So I'm cautious of that here for injective. Is it going to come higher and then fizzle out? I'll just be quite cautious there. Something else is looking relatively strong. Again, with the meme coins, Pepe, I know we checked this out yesterday, but you can see that broke higher after the pump and dumps on several other cryptos. This little break higher here could signal a little more strength. It hasn't had the same sort of correction that it did in the previous correction, 64%. It's only down 35% here, still above the strong 50% levels, still above the April lows and a long way from that. So any sort of correction here would still keep it in a relatively strong position relative to other cryptocurrencies. So I don't want to get people confused to think that I'm saying these are going to go up from here. I'm just looking at them in terms of a relatively strong position compared to other cryptocurrencies, okay? On to render versus US dollar. So we had a look at render versus Bitcoin. Now render versus USD also had a bit of a turnaround here. Higher lows still forming. And even if this is to break down, $7 there, and the low here is 635. It's only down 54% total from that top, and previous moves, that one there was 56. So relatively balanced. I would still be okay with anything around that particular zone, $5 to $8, as you could still see some support come in there for that next move should we get that next move. So it's still in a relatively strong position compared to other cryptocurrencies. So I've looked at Pepe, I've looked at Render, looked at Injective as a different look there. Now, what a week chart would look like, forget the name up here, I won't reference it in case anyone gets triggered. That's what a week chart looks like against Bitcoin, and you would likely see lower gains than other cryptocurrencies whenever we see this next leg. Yes, they will still see some upside. Yes, you've still got people who believe that there are late runners and all this sort of stuff out there. But if you want to just make life easier and not try to pick some sort of late laggard runner, well, it's up to you. I mean, do what you want. That's fine. But it's not my cup of tea. And you can see the low here, the next low, it literally found a new low yesterday before it had a tiny, tiny reversal. And that is the October low where the market, a lot of the market's pumped from, and it broke down from that low. It broke down from the April low, which is a significant reference point here. You can see the total market is still above that April low. And a weaker crypto is below that April low. XRP, another example, below that April low. and the January low as well, right there. So the January low was this reference here. You can see the markets were up from that point, and others have been showing relative signs of weakness compared to those significant low points. Now, anything on my list here would be in a similar-ish pattern and continues to show low after low on a broader picture here over the course of months. Maybe not days, but typically over months. Matic is also another pretty bad loser here. Now, sure, they will see some sort of moves to the upside, but they're probably going to be subdued compared to stronger cryptocurrencies that have more legs to run. Matic also broke down from that April low. That's what this spike low is here. And January, somewhere back here. So again, weakness follows weakness. So there is your massive economic update. New all-time highs on the stock markets. The everything bubble is here. I think it's a matter of time until Bitcoin eventually gets there. Is it today? Obviously not, in my opinion. Still 91 days underneath that old all-time high and probably getting closer to that 4-month period as well. Reminder, UTA soft launch is here. Check out the link in the top of the video description. Subscribe to the free report if you haven't already. And of course, we've got the end of financial year sale coming up for everyone. And hopefully Aussies will be able to take the most advantage of that too. So the link in the top of the video description. Thanks again, guys. I'll see you back at the next video. Till then, take care and peace out.